Good morning, afternoon, or good evening, folks, depending about whereabouts you are in the world. Welcome back to my channel, Finnyfella Trader. I haven't been on in a week because I think I said in the last video I was going to be doing a bit of mechanical work, and that's exactly what I was doing. Long story, do not want to be lifting tools again for a long time, but I enjoyed the wee break. And I came back to the computer yesterday, Monday, and how do we look at the market, sort of got a feel for it again, stayed away from trading. And today is Tuesday, the 6th of December 2022. I decided to get back into a trade. I didn't want to go anything too big or stretch, just to get a feeling for the markets again, a feeling for trading. So I'm just going to run you through a quick trade I did today. And I closed it out on just a one-to-one trade, just to I guess build up my confidence a wee bit, seeing as I haven't looked at the markets for a few days. So I'll begin here on the daily. As you can see, the market never came back down into the fair value gap, the daily fair value gap I was looking at. And that kind of put me off my trading a wee bit. I was always expecting a return. But anyway, I don't like to... I only set up trades as if it gets into this area, I know what I'm going to do. So if it doesn't, then we move on. Excuse me. Still have this cough. Nightmare. But if we look over here on the daily, you can see that these highs were taken out. This daily candle here took out these highs. I do believe it's going to take out these also. And in here, you can see a fair value gap where the market could run into. It could also take out these highs, but I'll just take one high at a time. I don't like to get too far ahead of myself. So having a wee look at the retracement, we'll just zoom in a bit closer. If I take the fib out, I'll go from this low to this high. As you can see, this daily order block before the market made an impulse up. That's just around the 0.618 fib retracement. You could take it from these. This is really the order block, I guess, from up here. That's around the 50. And I actually have that marked out in a smaller time frame. And I'll just mark it out as a quick reference for you to see. Between here and here, this candle's high to this candle's low is a fair value gap. And the chances are the market may run into that. So that's what kind of made me think, okay, sells. I could look for a sell today because I'm expecting the market to maybe go down that way. But I'll just go down into the 4 hour. I'm not going to spend very long on this. As you can see in the 4 hour, originally I had my sell side liquidity set here. And I'll show you why when we get down into smaller time frames. But here's that 50 equilibrium. Here's the daily order block marked out, and also here quickly is the fair value gap on the 4 hour. So chances of market coming down into that from here, especially now, is pretty high. Because we're also in a fair value gap in 4 hour. But you'll understand what this trend line is in a minute. It's not actually a trend line, it's just marking out another order block. So, yes, believing the market's going to come back down, retrace into this. As I say, I'm not a massive fan of the fib, but it gives you a really good idea of what the market may do. It may come into that 50, it may come into close to the daily order block. But again, we'll just keep an eye on the candles and market structures to see exactly what it will do. At a time, we can only just assume it's going to go there and know what we're going to do when we get to that area. So here we have in the 1 hour. This is a 1 hour order block that was marked out. There is also a fair value gap between here and here. that I'll just leave on for a moment. And I was actually looking at, if I just unlock that and we will clone it, I was actually looking at this sell side liquidity here. From this candle's low. What's the market did punch through, and you'll see it in the 15 minute. And the 15 minute, this was obviously fair value gap, but to clean it up, I'm going to delete that. This, for me, was sell side liquidity, and the market did come down and take that out, as you can see in this candle here. But this was also buy side liquidity here, here, and here. And this is also that fair value gap in the 1 hour. I'm just going to remove that. And that, remember, is the 1 hour order block that I had marked out. So if we take it, the mark run up in, this is just before the New York Open. So these purple, hopefully you can see it is in the video. This is the London kill zone. This is the New York kill zone and the London close kill zone that I like to look at. So in the London Open, say, before the New York Open, we had the market come down, take out this buy side liquidity. Then it rushed up very quick, which for me is a sure sign that the market may be doing that just to take out this buy side liquidity in 3 areas. And it run up and just hit this almost to the pip before reacting. So I'll go down into the 5 minute time frame and I'll show you what made me want to enter this trade. As you can see, this ASB is structure break for me on this one here, which you'll see a lot easier whenever we get down into 1 minute. But just to give you an idea on the 5 minute, this is what I was looking at. The sell side liquidity here and here was taken out with this candle here. The market reacted quickly. It run up, take out this buy side liquidity, this buy side liquidity, this buy side liquidity, wiped it all out, came to the 1 hour order block, and it tapped it almost to the pip, and then the market reacted and started to sink away. I'll just go straight down into 1 minute closer view. Now remember, this is the New York kill zone. From 7 o'clock in the morning to 10. That is New York time. The market took out this green line. Remember, it's all buy side liquidity. Run up and touched this 1 hour order block, and it made this lower low, let's say. And it came down and it broke on this candle. I'll just zoom in a wee bit quicker. It broke this structure with this candle here and also printed a small fair value gap, as you can see, between this candle's low and this candle's high. The market returned up into that and reacted, and I do believe I entered about here, but I'll just put the position on. I'll just actually put this on now, short, just to show you what I was thinking. So I always like to go 20 pips as as my stop loss, and I usually like to do a 2-to-1 at least. But on this occasion, I was only getting back into the market. I wanted to get a feel for it again and understanding for it again, because I'm one of these people that if I don't do something regularly, I kind of lose touch with it. So I like to ease in and break myself in. So once this structure was broken from this candle here, I decided I was going to look for an entry, and I was happy with my 20 pips above here, because if it goes any higher than that, I would admit I was wrong in the trade, and I'd give myself loads of breathing room, and I'd give myself the opportunity for the market to actually run into this fair value gap here, as you can see in the 1 minute also, but it never came back that far. It only came back into this 1 minute fair value gap. And then when this structure was broken on this candle, I felt good that now we may see the market sink and I'll get my 1-to-1, which it did in what is roughly the length of that time of that trade, we'll say, was 17 minutes for a 1-to-1 trade. I guess the reason I went 1-to-1 also was you can see this for a value gap here, and I was aware the market kind of stopped here, but that just makes me worry not to go for a massive trade. First of all, I know my template, as you can see, is usually a 2-to-1, 20 pip stop loss, 40 pip target, but I was looking the market to run out these lows, and I do believe, yes, we're going to see the market retrace down into this equilibrium of that range, if you remember. And, it could have been a massive trade, possibly, which would have been roughly a 5-to-1 trade. But the fact is, I'm not really interested in that right now. I just want to get back into the rhythm of things and not overreach beyond my talent right now, should I say. So that's my trade. I'll just show you paper trading. As you can see, the last trade I done was on the 24th, which was over a week ago, and today the 6th. 1-to-1 trade. My account balance is now 74,666.81. That was starting off with a 70,000 account. So we're up. What's that? I'm not sure what that percentage is, to be honest, but we're up anyway. We're up probably over 5% within a few weeks trading. As you can see, of winners and losers, and I'm trying to keep my losses not even the full 1%, because I like to pick an area that makes sense to me. So this fair value gap, if I had broke that, I wouldn't have panicked. Now, if it had came into this and closed above that, then my way of trading is I'm going to possibly close the trade and not take the full 1% loss, just because it doesn't make sense for it to go any higher. Do you know what I mean? If it does, then obviously my analysis and bias was wrong. But ultimately, my reason, if I just go back onto the daily, to look for a sell was the belief that the market has taken out these highs, not quite here yet, but it can't just keep pumping up in a straight line. So using the fib as an idea, excuse me, just reset this. Using the fib as a means of understanding where the market may go, and using the daily order block and this fair value gap from this candle's low to this candle's high, and knowing where the equilibrium is in this range from here to here, it's fair to say that before we see the market continue going long, it may come back in and close this fair value gap up, and then we'll see a nice trade. I'm probably looking for buys if it comes down in here. I'm going to wait and see what the market is going to tell me and take it from there. So I will just going to go back down into 1 minute for 2 seconds just to show. I'll put my executions on, settings, executions. There's when I entered. I had the 1-to-1, so 1-to-1, and that's where the market paid me. And remember, this is only paper trading, so I'm not trading with live money right now. I'm obviously learning and just showing you my understanding of the market, and I hope it helps you with your understanding. Maybe there's something I say along the way that you feel is click with you, and I will click with you because I'm starting to feel more confident, more comfortable in the market than I ever have. Don't get me wrong, I'm not getting cocky. I am not getting, what's the word, overconfident, because that's when the market will really slap you, and it's done it to me before, many's the time. So I think I'll just leave it at that. I'm not going to ramble on. This is all based on ICT's, my understanding of ICT's way of trading, which I think is amazing. And yeah, I hope it helps you, and happy trading, folks. Until the next time, win or loss, I'll make another video, and see you soon, hopefully. Cheerio. Bye bye.